Hello, everyone. Welcome to the first episode of our podcast. I'm Anthony,
JC.
and yeah, we're going to jump right into it. So, we've talked personally, you and I, a lot about Bitcoin and uh, kind of tying into how Twitter functions as an echo chamber right now. Um, I try to go head to head at times when I feel like I feel the energy enough to actually take on this religious sect. I go where the Bitcoin people are in their little echo chamber, and I make a debatable topic that most of them aren't capable of debating
Right.
because they're not aware of any flaws. They refuse, which is common in religion.
It's common in the
You're
cult.
going to refuse anything bad uh, about your own views, right? You're in Bitcoin's case, uh, the energy efficiency story, that narrative is just completely thrown out the window because they're like, well, washing machines use more energy. It's like, yeah, washing machines actually serve a function that is essential. You're claiming that Bitcoin is essential. How is it essential if it costs over $100 for the network to complete a single transaction? That doesn't seem very efficient to me, right? Well, it's the cost of mining, labor and all that, and you got to
Labor.
compete, and it's a free market system and whatever. But I'm like, you're stuck with 2009 era technology. You can have some soft forks here and there, and that helps tremendously. But you have so many problems in terms of scaling that you needed a layer two already in
Yeah.
10 years. So what, in another 10 years you're not going to need more, to the point where you're going to morph what it was originally set out to do. And I showed you a chart which is accurate about
Right.
the halving cycles with the block rewards, right? So we already have 90% as of April 2022 already mined. Okay? That was a
It's a big piece of cheese right there.
12, 13 year period. 13-year period.
Yeah.
Okay. For the next 100 years, everybody's supposed to adopt the internet's first real currency, right? But there's only 10% of mine, and the halving cycle works in such a brutal fashion that by 2035 you're mining less than 1% of the remaining Bitcoin. Yet the energy costs are continuously go up because that's how network difficulty goes. The more miners come online, the more energy you have to exert in order to mine that same Bitcoin, but you're cutting it in half every 4 years. It's like if you were able to extract oil 100 years ago, right?
Yeah.
But every 4 years, the amount of oil that you're able to, the amount of oil that you're able to extract is mandatorily cut in half. But everybody needs to run on oil. We can't use nothing else that would make more sense. That's essentially what those maxis think, the evangelists. And I'm not anti Bitcoin, but I'm anti, I don't believe that we have any flaws type of thing. I don't believe in technology advancing
Right.
because it's already gone. It's already passed. It's just that that's such a simple thing to grasp in like 15 minutes, the basic concepts of how that functions. And it's like a delay. It's like you're getting hit in the face in 2008, 2009, coming out of recession. It takes you 10 years to realize that thing is actually there.
Yeah.
For most people,
Right.
1.5% of the human population currently owns Bitcoin or has owned Bitcoin in the past.
One
So
point five.
it's gonna be the world's currency when
It's
the
impossible.
top 10,000 wallets, which include exchanges and other things, okay, fair enough, but the top 10,000 wallets on Bitcoin, because of the ledger, the blockchain, you can read it. They own over 30% of all of Bitcoin, and they're not moving that crap. The top 100,000 wallets after that 10,000, no, including the 10, no, after the 10,000, include it, they have 60%. Sorry, including 10,000. So the top 100,000, including the original 10,000, they own 60%. So as you expand that scope, it's just a consolidation of power at the top that you're supposed to, and we've talked about this before. So if you're in a poor country or a country with a messed up domestic currency like Turkey or Iran or Argentina or whatever, you're meant to buy that and El Salvador and then use it to pay your bills, and that's supposed to be the use case we champion, right?
Yeah.
Okay, volatility usually works against you in the short term.
in the short term.
Yeah, so you go buy Bitcoin a few months ago. It's lower now, but you're using that to pay bills. So you're talking about money being debased. I mean, in the short term, yeah, if you're trying to pay for living expenses, that's probably the worst thing you could do. You should get a stable coin that is not USDT. And that's actually what Strike has done in Argentina. They use USDT. I don't think that's a I think that's kind of a shady one, but the point is, yeah, the dollar is being inflated, but the volatility of Bitcoin is not good for working people in third world countries to use that to pay bills.
Yeah, which
And they
it
can't afford
doesn't-
to keep it.
they don't-
Okay,
can't
they don't
afford
have
it at all.
disposable income. But
Right.
you sitting in your little conference in Miami,
It helps.
you have
Helps to
disposable
have a
income.
nice,
Yeah, I got
pocket
in
there.
early.
I could
Whatever,
use it a
man.
little more whenever I
Yeah,
want to.
250. I got them. Whatever.
The irony is though, when these
It's a
maxis
storage
will
of
say
value.
they will preach strike, but at the same time preach, not my keys, not my Bitcoin. But are you supposed to spend it
What
with
is-
strike?
What
Are you
is
suppo-
strike?
it's-
Like in terms of
It's
where's
basically
your Bitcoin?
It's what
there?
Ripple is trying to do.
Okay, that doesn't-
Actually, excuse me. It's what Ripple is doing.
okay, but where is your? Do you know?
They're a payment company.
Yeah, but where is the Bitcoin that you're transacting
So if I
or
have
holding?
Bitcoin, I use a Strike, or I use the Lightning Network to transact. So I would pay you in Bitcoin. I would use the Lightning Network. The only thing is, you have to pay a fee, or like a gas fee, and you pay. I don't know. It depends on the volatility of the market.
My question is, where is it being held? Like you could buy Bitcoin for the first time right off Strike. I'm not sure where that's being held.
I'm not sure, but I think it's essentially.
You don't own it, right?
Yeah, I don't think you own it. You don't own. I mean, it's not on Strike that you have it on. Not that I'm. It's like a wallet. I believe it's a wallet, and I don't want to be talking out of my ass right now, but I believe it's a wallet. You hold it hold the Bitcoin on there, and then whenever you want to transact in it, you use that network with the merchant who has the same network, and you pay in Bitcoin. That's the gist of it, from my understanding.
Okay, if it is meant to be a storage of value, why would you pay something for it?
That's
it's like
what I'm
taking
saying,
part
yeah.
of the equity of your home and saying, "Yo, I'm gonna buy coffee for you."
You're right, exactly. So what's
Why?
the point of that if you're supposed to look at it as digital gold? So is it digital gold, or is it like money I should be transacting in? It's like you can't have it both and think it's okay. So like it's okay for the El Salvador and Argentina to fucking do that shit, but oh no, not me. I'm gonna hold mine and I'm not gonna use that at all.
more-
Actually, matter of
yeah.
fact, I'm gonna take debt and I'm gonna use it as collateral, and then get U.S. dollar and use the U.S. dollar against that, while as it appreciates in the long term. That because it kind of cancels it out, because the money supply is going up, the value of the dollar is going down. So if you take debt or use Bitcoin to essentially, if you were to do that, if you would have the notion that, okay, well, I know Bitcoin's gonna go up, so like if I take debt out on Bitcoin or use it as collateral, I will get X amount of dollars, loan to value type of thing, kind of like almost using it as like equity from a house.
Yeah, and
But
I don't-
it's
I
the
don't wanna-
opposite though.
I don't want to drag too much on that, but yeah, I mean, your Bitcoin is priced in the evil currency of the U.S. dollar usually, so it's
I mean,
priced in
essentially.
fiat currency.
Yeah.
So the value that you,
Has to.
unless you live in it again, unless you're a hardcore echo chamber, one Bitcoin is one Bitcoin.
like there's nobody that lives off Bitcoin. There's nobody. Like I don't care
Yeah.
how much Bitcoin you have. There's nobody living.
And
off
if
of that.
everybody's holding
except
it,
for Micro Sailor.
if everybody's holding it, and you already have 60% in the top 100,000, they know what it is. They know it will go up as halving cycles continue and adoption grows. Fine, that's perfectly fine. Nobody's against that. But you can't pretend that you're going to transact in this thing that is essentially supposed to be this digital gold. And in my view, the block rewards were emitted too aggressively, and the supply cap was just randomly given a 21 million cap, and it was originally intended as a peer-to-peer network for cash, digital cash, and it was meant for people to mine off of their computers. Your computer processing unit
Right.
was the point. There were no ASICs. There's not even GPUs mentioned in the white paper.
Right.
It's a lot for one person to or a team of people to invent such a thing. That's already a big deal and accomplishment. They didn't know if it was going to get adopted. That's pretty much clear by the forum talk. But on top of that, try to have the foresight and wherewithal to say, wow, we're going to have to put in, some sort of hash limit power based on the rig and all that. You know,
But,
it is a lot for one person to do in 2009 and then look 10, 20, 30 years later.
if
and
you
then
do
say,
that, I mean, it's almost like you can't do that now, only because we have um, publicly traded companies that mine Bitcoin. So if you put a hash limit on that shit, now,
no, but back then, I mean,
back
from the
then,
beginning.
of course, from the beginning, yeah, but nobody saw this. Like
Yeah.
now
It
we're
was
gonna
an
have
experiment.
issues.
If you look at
Essentially
the
it
context
was.
of the conversation, it was an experiment. It's like we have this idea, we're able to implement it. Hopefully, it catches on. We don't know. There you go.
Right.
So, religious figure, mysterious figure, and I think if we had more clarity on who created it, I think that would kind of shatter a bit of a lot of religious things are shrouded in mystery.
Yeah, this is the Messiah complex.
Yeah, resurrection of
Right.
Yeshua, resurrection of so and so. Somebody did this, somebody did that. And nobody's able to confirm it, but those people believe it. It's the same.
It's in the book,
It's in the book.
the good old book.
It's in the white paper. And to your point, the overbuilding, the over construction that we're seeing now, is to mitigate the lack of construction that the U.S. has had in terms of home building, single family home building since the 80s. So that is where the scarcity kicks in.
We're overbuilding. We have
No, let me finish. I'm saying the overbuilding now is to counteract the fact that there was a lack of building since the 80s of single family homes. It was a gradual decline in activity. If you look at the 50s, 60s, a lot of suburban America came alive, a lot of the interstate highways and things like that. You get all that, then you get a gradual decline, whereas like, well, we'll build that condo when we get around to it. That condominium.
condo or single family.
We'll get around to building the condo. We'll get around to building the single family when we get to it, because condos now are more lucrative. So I'm thinking of condo. But in terms of single family home, you have to secure all that land. You have to get the zoning. You have to get it takes a long time. And if there's not an immediate demand for it, which is kind of ass backwards, because home building does take several years to do if you're doing it right. So it's kind of weird to wait for the demand in order to begin building, because you don't know where the economy is going to be like in a few years. And I think that's kind of the point you're trying to get around to.
Well, I mean, these homes the ones that are currently being built now, I mean, they started 2 years ago.
Yeah.
So maybe even more than that, because, I mean, they had obviously this cold, as you mentioned, that happened 2 years ago or a year ago. That's all being, I mean, a lot of the ones are being finalized or at least being finished up. I mean, I'm only speaking on Florida specifically, because there is so much building here. It is crazy how much they're building. But I still think that since the moratorium happened and since the foreclosures are now ramping up, because there wasn't any foreclosures for 2 years, you're going to see a lot of homes open up. And someone's gonna have to pay for those homes if they ended up on because it's going to the bank. That's who's gonna hold it at the end of the day. The bank's gonna hold that house until they have to liquidate.
Well, I think somebody at some point, now or later, is gonna end up holding the bag. Whether it is the home buyers, whether it is the developers, or both. They're gonna. You just can't.
Someone's gonna hold it back. Yeah,
somebody's gonna hold it back. So we agree on that.
The developers are
don't,
definitely gonna hold it back.
I just don't
the
agree.
Banks are.
I don't agree how. I don't necessarily agree with you on how they're gonna be ending up holding the bag. That's all. So a means to an end. Like the end result, somebody's gonna end up holding that bag. It just can't. Is not sustainable. But what will trigger that correction in the market? What will trigger it apart from mortgage rates? Because we're not seeing that really dampen.
So
It's slowing a bit, but we're not seeing the growth, and home sales
my answer to
stopping.
that
It's
result,
double digit
my answer to two of those two answers
right now currently.
it's gonna be foreclosures, the ramping up of foreclosures that could not happen during the pandemic. That's one. Two is for the states that have property taxes, like Texas, like Florida. Since there has been an influx of people buying, and the prices have been increasing, the property taxes are going to go up. So who's going to pay for that? They have gone up, and they're going to keep going up because it gets reassessed every year. So in the next 2 years, they're going to be reassessed. They're going to be like, whoa,
every home
damn,
sale.
my house is not worth $500,000. It's worth $350 right now.
Well, yeah.
Why am I paying so much in taxes?
Every home sale around your home, if you're a homeowner, that sale influences your property tax. So if they're all going higher, even though you're sitting on your lot.
So the ones with
nice
fixed income, so now in Florida, for the ones that have fixed income,
which is
the ones that are retired
and
disabled or have disability, so the ones that are in those circumstances, which are what? Boomers, because they're the ones with the money, they're the ones that have the homes. Those taxes get reassessed. Those taxes are going to increase 40% at the most, 40 to 50%. They're not going to be able to pay that because they're on fixed incomes. And especially the ones that don't have a mortgage anymore, because there's a lot of those too that don't have mortgages anymore because they already paid it off and now they're just paying the tax bill every year. Those are going to be affected. And those houses are going to go to the state because the state will commandeer that house because you have not paid your taxes.
Or they'll short sell it and give
further screw the housing market.
Well, as long as there is a buyer.
As long as they're a buyer, but at pennies to the dollar. So who's gonna...
I don't think it'll be a crash. I think
I'm not saying a complete crash, but something's gonna break, and it's gonna be the housing market. I don't know when. Maybe in the next year. Maybe in the next 2 years. Because it's a slow burn too, especially with housing. The housing market is like a slow burner. It'll, like, you have all these catalysts that happened 2 to 5 years ago, and now we're gonna be seeing that basically just crumble slowly. Because I mean it happened once 2008 happened. I mean by 2013, market was on the floor. 2015, market was on the floor. That was the bottom. So it took a few years for it to, finally go all the way down, and now you're seeing the boom. Now this is the boom. Now now we see what's gonna happen in the next 2 to 3 years.
I don't know if 13.
Maybe millennials will get their wish and actually own a house.
It may not be the one you want. Maybe a movable one where you can kind of get it delivered out to the middle of Utah.
Or maybe BlackRock might accumulate all the shit, and maybe you won't own anything and you'll be happy. How about that?
I think you'll get a portable home if you want one for $50.
That's great.
I mean, housing costs are in $120,000 and up. That was pre-COVID probably, so it does cost developers, but you never want to feel sorry for a developer. They're always going to get their wish until they're not able to sell the property.
I think they take out insurance on that shit too? Like if something happens?
When you have the capital, you can
do anything. You actually.
I don't think it'll come from the housing market. I think there's so many other fragile things.
The housing market is the last thing that's gonna happen. That's the last. That's what I'm saying. Like that's a slow burner. That's gonna be the last thing that falls.
I think there's so many other things that are so easy to point at that are good indicators historically of like economic recession. The economy receded this quarter, Q1 2022.
Yeah, we're like at
1.5%, but
consumers still buying. We're still buying as
but that's until the disposable income actually needs to be used for things that are more essential. Like you said, I mean, the big killer is really inflation more than anything else.
That's really fucking everybody.
If you're not making money that keeps up with inflation, which is virtually very difficult to do for most people. It's just like, yeah, I'll get an 8% raise. I'll just go. I'll get it fixed to the buying power of the dollar. It's like, good luck. You're not doing that because you may have a sign-on bonus. You may have this, that, or the other. You may get a better job actually, but at the end of the
Who
day, you're just
knows?
trying to keep your head above water to what you were most likely earning before the pandemic anyway. So
Yeah, you're basically gonna break even if you get a
I
raise.
know that's pessimistic, but
That's not. I
and
mean,
here's
that's
the thing.
fucking math.
I want to get off this kind of morbid topic, but it is
I
an
mean,
important one, right? Uh, from my understanding, looking at data, inflation of the U.S. dollar and most currencies, they never really go back into the bag once you take that cat out.
oh no.
So once you're paying $8 for a smoothie, oh, it's because we're short of labor. Business owners will
There's
give you
always a reason
will
or an
front you the
excuse.
check. They're assuming the risk, but they'll front you the bill, and you have to take it, right? And you're supposed to be compassionate, understand. Let's tip 20% because they're struggling. But anyway, usually if the smoothie's 8, it's not going back down to 5. You're already used to paying that bill, and
Right.
and it never goes back. So I mean, there are so many new opportunities in the digital age, right? We're able to do a podcast. We're able to have people that know how to set it up and everything. We don't need a crazy ass studio where, oh, if you're not in New York, you're not making this happen, or if you don't know the right people. So there are opportunities elsewhere where you do get, you get paid to do things a little more digitally. But all in all, if the cost of living is going up all around you, forget about home buying, rents, this, that, essentials, things that are needed for a healthy, industrialized economy. If they're not able to hold up, you got another ancient Rome on your hands, and that sucks. But anyway,
Yeah, I think
you
we
got to keep swimming.
or some type of like Andrew Yang was proposing a tech tax. So like you're taxing these tech companies, all of them, and they make hundreds of billions of dollars, trillions of dollars. I mean, Apple is $1 trillion company.
Worth, yeah.
Right.
Yeah, yeah,
It's worth and
yeah.
so that money can come from that. I mean, there's too many ways. There's too many ways. You
Andrew
you
Yang,
can simplify the tax system and so that the people down that don't have that kind of like a $32,000 job, they
here,
they're not paying thirty six
oh my
percent.
God, I'm gonna sound like a conservative. I'm a
I mean,
I'm
go
a straight
ahead.
moderate down the middle, but here's the thing with that.
All right, tech please.
Andrew Yang is a very smart guy, and I'm sure he has a robust plan before
He's also business oriented,
before talking about
not a
like
politician.
okay, can I finish what I'm saying?
Not like Trump though. Well,
Okay,
actually, we don't know that, but
so I'm sure he really thought about it long and hard before he even brought up that concept. Okay, um, but here's the thing. We've tried that, it doesn't work. And here's the other thing. There's a few things there that I'm trying to unpack in a short time. Well, basically, money is given as a result of economic productivity. Like, the thing that we're suffering right now is because since the 70s we've shifted from manufacturing. This will tie into what we previously
yeah,
talked about. We went from things that had a tangible value, and we shifted to financial instruments. 70s and 80s, like
yeah,
that's the majority of this country now. It's
yeah.
just financial instruments,
Just
leverage
debt.
debt here,
Yeah.
kick the can down the road, all of that.
Yep.
That is kind of the fall of an empire. Okay, but
It leads to it. Yes.
yeah. So without thinking about that for a second,
Kind of hard.
economic output is the reason money exists. You have to provide something of value in order to receive it. That's how it should be.
Right.
So, in my opinion, giving universal basic income will just warp the idea of the money supply even more. I would think a better thing would be to ease up on the taxes a bit more,
I
so that way we don't have to give nobody anything back.
let me because I feel like when this kind of conversation in regards to UBI comes up, we always forget the military industrial complex exists, if that was cut in half, fuck that. If you cut 20% off of that bitch, you can pay for this.
Yeah, but we're
100%.
talking about a pipe dream.
This is what are we talking about here? This is a pipe dream.
No, universal basic income doesn't. I mean,
That
if
is a
he
pipe
was
dream.
if he was elected, I think he might have had some sort of plan to be able to do it, right?
I mean, he did talk about having
More
that
than
plan
cutting.
and
That's more
using it.
realistic than cutting down on the military at this point, right?
What is?
The UBI.
Then cutting down the military?
Yeah.
Oh, absolutely, yeah. So I mean, we're
so-
talking about like Lockheed Martin saying, I do own missiles, right?
So the final thing with that, I mean, to kind of wrap up this conversation, at least for me, you can have a closing thoughts on it if you want, but how do I say this? Remember the beginning of this conversation about the Elon Musk, that he gets rewarded with more capital due to his decision making, and obviously he has the elevated status, so it's easier to make those decisions.
Right.
The less money you tend to earn, there is a tendency also to not put that money in the proper places to make it grow due to financial illiteracy. So the money is most likely, not most likely, but there is a good tendency for that money to be wasted on shit that's not necessary anyway. So there is like more foundationally like a problem with financial literacy, more than just giving people blank checks.
I mean, yeah, I agree with that for sure. And if you want to solve any of this, I think financial literacy would be the first thing you should solve. Because if you have that, I think everything else can happen.
You gotta you gotta learn how to navigate the game.
Yeah, and I feel like if financial literacy will be like nipped in the bud early on with kids, middle school, high school, I think you can nip this whole this whole issue and like just have that be the next generation that actually, actually gets it in order and doesn't collapse the empire. But that is also a pipe dream. So
yeah.
With that, I think we've got our time.
Yeah. Well, thank you guys for joining in. Be sure to like and subscribe and share this with people that you may would find it interesting. We're going to try and make this more regular. Bear with us. It's our first episode. So, thank you to the team here that helped put this together. Thank you.
Chris, Zach, thank you very much.
Yes.
Appreciate your help.
And
we appreciate the studio and the time. Thank you very much. Peace.
See you guys later.